What Bitcoin Did podcast.
Hi there, how are you all? Are you all having a good week? Welcome to the What Bitcoin Did podcast, simply the best Bitcoin podcast in Bedford. I'm your host Peter McCormack, and today I am following up from my bearish case for Ethereum interview with Tuur Demeester with the builder's case for Ethereum with Scott Lewis and Bryant Eisenbach. But first, I have a message from my show sponsors. So first up, I have my friends from Block Phi who have been sponsoring the podcast since September now, and they have extended through to May. So why should you care about Block Phi? Why do they keep advertising on the podcast? Why have they extended again? Well, they provide the most trusted crypto-backed loans on the market, and they know that this show has proper Bitcoin people listening. So whether you need a crypto-backed loan today or sometime in the future, they want you to come to them first when you have the need. And they are doing everything to be the best in the market globally. And yes, they service clients across the world. And they are also in 47 US states, and they've got interest rates as low as 4.5%. If you sign up at blockfi.com/whatbitcoindid, you can get $25 in free crypto added to customer collateral loans for under $10,000, or $50 in free crypto added to customer collateral loans over $10,000. And applying takes less than 2 minutes. So if you want to check them out, that is blockfi.com, which is blockfi.com/whatbitcoindid. And if you like What Bitcoin Did, you should definitely check out the Transatlantic Cable podcast from Kaspersky Lab. They look at security issues that affect everybody and also make sure the podcast fits into your busy day by keeping it to 20 minutes or less. Check it out and subscribe wherever you get your podcast from by searching for the Transatlantic Cable podcast. So, an Ethereum show, right? We better do the background to this. So, following my interview with Tuur, the bearish case for Ethereum, I watched Tuur take a lot of stick about that. And some of it was unfair, but at the same time, I thought it would be right to reach out to the Ethereum community and say, look, does anyone want to come on? Does anyone want to talk about this? Does anyone want to offer some counter perspective from within the Ethereum community? And there were a couple of people who responded directly to Tuur. They did their own feedback and follow up. There was Scott Lewis and Bryant Eisenbach. So I reached out to them. I offered them the chance to come on the show and discuss Tuur's comments and also just talk a bit about Ethereum, because I might be going down the Bitcoin rabbit hole, but I'm not completely close to Ethereum. There are clearly things happening. I've got my doubts, but there are clearly things being built that people are using. DAI seems to be getting a lot of traction. A lot of people talking about DAI. I mean, I'm not hugely excited about the Ethereum primary use case being a stablecoin, but look, at the same time, if people are building things, people are using things, I want to be open-minded, I want to be fair. So yes, I got the guys on, we talked about it, we talked about some of the things that Tuur talked about, some of his criticisms, but they were pretty fair with me. They were kind of honest, and they also gave back their own concerns with Ethereum, but the things they're excited about as well. So yes, I think this is a cool interview. I hope you enjoy it. You know, if you've got any questions, you can reach out to me. My email address is hello@whatbitcoindid.com. The floor is still open for other Ethereum people to come on to talk about it if you've got some different perspectives. I think I want to look a little bit more at Ethereum too. I read the James Presswich Medium post on it. Pretty interesting. Sounds a bit complicated, but I'm interested. I'm open-minded. So look, if anyone else in the Ethereum community wants to come on and talk about this, you've got a different perspective, then feel free to reach out to me. And listen, if you want to support the show, there's a section on my website that explains everything you can do. If you head over to www.whatbitcoindid.com, you click on the support section, it will explain everything to you. And I've now got 2 Patreon top tier sponsors. So firstly, a big thanks to Elite Crypto Consulting, your personalized trading teachers. Thank you guys. Thank you for supporting the podcast. And secondly, I've got a new Patreon top tier sponsor, vidyen.com, WordPress plugins for advertising and Monero mining reward sites. That is vidyen.com. Thank you for supporting the show. Okay, so on to the interview. Like I said, if you've got any questions, feel free to reach out to me. Hey there, Brian. Hey there, Scott. How you both doing?
Doing all right. How are you?
I'm doing pretty well. You good, Scott?
Yeah, I'm pretty good. Thanks for having me on. I appreciate it.
No problem. Thank you both for coming on. Obviously, I had my episode with Tuur that came out recently, which was like a bearish case for Ethereum based on his Tweetstorm, which obviously kicked up quite a bit of a storm, a big response from the Ethereum community. But I thought it would only be fair, and also for my own interest, to get a couple of people on to talk about it. And what I'd noticed in Tuur's feed, he'd retweeted both of you because you'd both offered responses to it. So thank you for both coming on. I'm going to start with a interesting question. So a lot of my Bitcoin interviews, I will ask the guest a specific question because I'm always interested by the response, which is, what is Bitcoin? So I'm going to flip it and do it for this. So Bryant, what is Ethereum?
I think in some ways it's whatever you want it to be. It's really a platform for you to allow to build protocols and interactions between different parties of people, and a platform to build digital assets on top of.
And you, Scott?
Yeah, I see Ethereum as a substrate for exchanging value. It's open-ended, and you can program money or assets to do what you want, and it's more flexible, and it offers a lot more possibilities.
Okay, and before we get into the weeds of maybe some of the things to discuss and give you a chance to respond to them, I've got a few things I want to work through first. So it'd be great to find out the background for both of you first and what you're working on now.
Yeah, sure. So I'll start. My name's Bryant, Fubalubu on Twitter, which somebody has told me before incorrectly means fat warlord or something in Chinese. I don't think that's correct, but I thought it was funny. So currently, I've been a freelance developer working on numerous different applications as I've gotten involved. Working on Ethereum. Mainly through some of the hacks that happened in 2017. I looked at those as kind of a validation that my experience. I'd worked as a flight control software engineer for a helicopter company in the United States for almost 6 years. So I saw what was happening as really a lack of process in the security of these applications. So I got involved from that perspective of I can add my perspective to the community, and that's been a good part of what happened this past year with my involvement. So the security community is a big part of what I do. Locally, I started a developer community that primarily does education called DAppDevs, and currently working on a larger project now called GunClear. That's trying to help firearm owners protect their digital provenance in the digital age, which I think is really cool.
I'm Scott Lewis. On Twitter, it's Scott_LEW_IS. I was a trader for a little over 10 years in the traditional finance. I started my career at Susquehanna, which is also pretty active in crypto today. Started by trading digital assets. About a year and a half ago, I co-founded a ICO due diligence resource that was kind of like Wikipedia for token sales, and mainly with the goal of making like a place where the community could come together and collate information specifically about ICO scams and other very shady projects that maybe aren't out and out scams. And then the new project we're working on primarily now is Settle. It's Settle.finance, and it's an operating system for decentralized finance, primarily on Ethereum, because that's where DeFi is mainly happening.
Okay, cool. And then I'm going to ask you a couple of questions about Ethereum in a second and just tell you about my experience and what I know, which is very limited. But it would be also good to understand both your broad kind of view on the entire cryptocurrency market. You know, what do you like? What don't you like? What are you interested in? What do you think is completely disinteresting? We'll start with you this time, Scott.
I like a lot of stuff in the market. I used to really like Bitcoin. I kind of got turned off by some of the more adversarial aspects of the community. I always liked Ethereum as soon as I found out about it. I think a lot of the digital assets in the market are very uninteresting. I don't like a lot of the ERC20 tokens and other ICOs that sort of have no purpose and not really building anything useful. I also don't like a lot of the coins that are little brother coins that are sort of like copies of like a different coin, just not as good. Like I might put like Litecoin seems like a reasonable community, like authentic people like it, but I just don't see why you would want Litecoin over Bitcoin, like ever.
I mean, I think there's a lot to like about the whole crypto community in and of itself. It's kind of this like explosion of idealism and talent and just people trying things that really hasn't been seen for quite so many years. I think that's what drew me to it. So I mean, I've gone through a bit of a journey with Bitcoin and the wider crypto ecosystem myself. So I remember like trying it out, like it must have been 2012 or something, around that time frame. I remember the price distinctly at around like $40. And I was just like, I'm not sure I understand this. It's cool and all, but I'll deal with it another day. A friend had introduced me to it, and I would always check in with him every once in a while. And it was kind of like a fun thing, like, oh, hey, how's your Bitcoin doing? And like that was basically it. And then so in 2017, for most of the year, I lived in Portland, Oregon, and there's a pretty vibrant Ethereum community out there. And I had decided to just kind of take it easy, quit my job, and just like relax and like learn some different things. So right around that time that happened, that same friend introduced me to Ethereum, which had been going through like a hype boom at that point. And I think that's the point where it like really clicked for me. It like made sense, like, oh, I can build on top of this. I could bring some of the ideas I have. And I always thought of myself as a person who has a lot of ideas, most of which are probably terrible, but the opportunity to bring things to life that has some way of impacting the world and making the world better places, what attracted me to Ethereum, because I think a lot of people in the ecosystem have a very similar mindset. They are interested philosophically, technically, just culturally, socially in what's going on here, and working really hard to make that a reality. And that like struck with me, and it told me that, this is where I kind of want to spend the next few years of my life exploring and seeing if we can make it a reality.
So I'll give you my background and perspectives so you understand where I come from. So even though my podcast is called What Bitcoin Did, that was more of a play on words from the background of why it started. And at the time I was pretty open-minded to all of the space. I managed to buy Ethereum January 17. I think it's about $9. It was on Coinbase when I was researching Bitcoin, and I bought everything. I bought lots of ERC20 tokens. I bought Monero, Litecoin, Dash, like loads of different things. And my journey of doing the podcast, I've tried to educate myself as much as possible. I'm a very big fan and supporter of Bitcoin. I'm quite interested in Monero, and I would say with Ethereum, I've become kind of questioning. I feel like there's a lot of stuff a lot of unnecessary things have been built. So broadly, it seems like a big waste, but I'm sure within there's some very interesting things which I want to find out about from you guys. But at the moment, I'm kind of like, it seems like a very big, complicated and unnecessary system and I'm not sure what it's designed to actually build that you can't build in other ways. So I think it'd be good to get into that. So if I can understand, because I think I know other people have similar questions. So what would be a good thing to hear from you, Bryant, is tell me about the good stuff that's happened with Ethereum and the good projects and what's being delivered that you think has value and is the kind of thing that will be existing in 3, 5, 10 years.
Yeah, so I mean, I think the DeFi community that Scott is talking about is definitely something that's been up and coming in this past year, and to me is kind of almost a no-brainer to what the platform can be used for. Personally, I'm more interested in kind of social applications of the technology, how we can use it to interact with each other in a more effective and trustful way. And, as a platform, it doesn't really make a determination of what's good and bad. There's a lot of cruft that exists out there. And I think it's almost kind of a testament to why it's useful that there's so much crap that exists on top of it. Because it's so easy, like you can deploy a token in 15 minutes. You can do, you can interact with different types of decentralized exchanges. You can build tokens on top of tokens on top of tokens. Yeah, it seems like a lot of crap, but you're starting to explore the economics and of the situation and how people use economics to kind of interact with each other. And the tooling, especially over the past year, has been exponentially increasing and making it easier to sort of compose these sorts of projects together and to use them to build like bigger and bigger things that hopefully end up in this like self-sustaining cycle that are making things better at the end of the day. That's what I'm hoping.
Okay, and similar question to you, Scott. Like, what is the good stuff on Ethereum, and what are the projects that you think are the biggest success stories and that will probably be existing in a few years from now?
I mean, first I'd just say a few years from now seems like I don't know what the world will look like in a few years. Like what we have now versus what existed a few years ago. But I can say that, like in our blog on Settle, we just had a blog post about DeFi Open Finance, and we mentioned 3 projects that it seems like have achieved some product market fit already on Ethereum. The biggest example seems like MakerDAO. You have $72 million worth of DAI floating around. A not insignificant portion of all Ether has been locked in the contract, and it seems like people want this and want to use it. Will they succeed over the next few years? I have no idea. They definitely have some big challenges, but it also seems like a pretty good team that can confront challenges. And we also mentioned like 0x seems like they found some product market fit. They recently had one of their big users of the protocol, DDEX, break off and start Hydro protocol. And then also see some product market fit from Compound Finance, which is sort of like a collateralized overnight, or actually in every block you can withdraw your loan or put more money in, but sort of like a very, very short-term collateralized lending facility. I mean, it all, like, real people are using these things, and I think if you compare that to maybe the traction that Lightning Network's getting, like, it looks pretty good, you know? And I mean, Lightning Network has a lot of very devoted followers, but I think last time I checked, it's like a little under 1.8 million Bitcoin at the locked in there.
Yeah. And then also, you know, if you were trying to be balanced about Ethereum, Scott, what are the things that maybe you think aren't so great? What are some of the fair criticisms of Ethereum?
I think Ethereum needs to figure out governance at some point. Ethereum's getting big, and I think in the early days, if you have like a, honestly, I don't even remember his first name, but the Dunbar number is sort of like a group for how big can a group get before you start losing like person-to-person trust. And it's like maybe 150 is one of the levels for how much trust you get. Ethereum's growing, and it is getting so big, and the people that have important roles in it is getting larger and larger. And I think this is like, it needs to be figured out because the questions are getting important while the group's getting bigger.
So yeah, I could sort of follow up on that. I think governance is also one aspect that over the past year has been growing kind of exponentially in the Ethereum space as people have realized it's important to think about, and it's important to discuss, and it's important to ensure that what it is and what it not is important. So this past year, the Fellowship of Ethereum Magicians was formed. I've been a part of that. The security community, we sort of formed as a ring or like a subgroup of that kind of overall group. And it started as a place to talk about Ethereum improvement proposals, but I feel has turned more into sort of a philosophical community and a governance community for Ethereum. Because at the end, the protocol, the updates to the protocol is the governance of the protocol.
I was a trader in New York, like when Occupy Wall Street first started happening. Not a fan at all. But if you look at how much interest and excitement you had about Occupy Wall Street, and they also sort of adopted, or not that Ethereum's definitely, so they're adopting it, but they adopted a very, very, very loose governance system. And Occupy Wall Street as a social movement basically died. I don't think they really accomplished anything of importance. Maybe Elizabeth Warren's popularity is the last remnant of that in the United States. And I'd be really sad if the Ethereum community did the same thing, because unlike Occupy Wall Street, I do believe, again, what the Ethereum community is trying to accomplish.
So how does governance currently work, Brian? What is the process? How would you explain that to someone like me who's not deep in the weeds with Ethereum?
So in a lot of ways, it's pretty much a meritocracy. If you have something really valuable to add, and you are able to add your voice to the discussion, and other people think it's a good viewpoint to promote, then it will sort of enter into the conversation and eventually enter into the protocol and how it's been formalized. The problem with saying what is Ethereum's governance is that it's not written down anywhere. It is kind of a fluid thing, and that's actually kind of by design, because as soon as you start writing down like too much of what a governance protocol is, people can start finding the loopholes and exploiting them to their own means. So it's important that the governance of something as large and kind of messy as something like Ethereum is, be both fluid and clear to the right parties. And the clear part is what we've been working on, I think, over the past year. We've sort of written out, like you write in the EIP, it says, oh, let's change the block reward or something like that. And then it's on a GitHub issue in the Ethereum repository, or in the Ethereum organization. And you can go there and add your voice as a GitHub user. You can put it on there. And then certain people share those EIPs to other groups like Reddit and just all sorts of different groups. I mean, there's so many different ways people talk about what's going on. There's editors who are only in charge of making sure that that process is loosely followed, and they try to gauge sentiment of the community, even though that's a hard thing to do, because if you're talking on Reddit or whatever, there's a lot of noise and there's a low barrier of entry to that process. So you try to collect the largest amount of sentiment you can without getting tied up with the noise that's out there. And so signaling and like finding the signal through the noise is one of the biggest, I think, issues that governance needs to be resolving, and that's one of the groups that is formed under the Fellowship of Ethereum Magicians that I think is doing something that really needs to happen.
One thing that appears to me is that one of the things that really doesn't help Ethereum is that there is the ability to buy ETH, and it has a price, and the price can fluctuate wildly, and that kind of impacts the impression and the opinion people have on Ethereum, and is probably a distraction from the work people are doing in building. Almost like, and I'm not a techie, but I can imagine the days where, say, something like Linux was first being built, or people just got on with things and built things. They didn't have to worry about any kind of valuation or token or any kind of market sentiment that went with that. Would you say that's a fair observation?
I think that's a pretty fair observation of the entire space. I mean, that is definitely one thing that even BitTorrent didn't have to deal with when they built. I think BitTorrent is probably one of the more interesting examples that exists. Like, you didn't have to deal with a token, you didn't have to deal with valuations. It was kind of a community project. I think that's the spirit a lot of developers in Ethereum try to bring to their work. So like, discussions about price are not like laid in law as being wrong or something, but like, it's not interesting. As developers, we'd like to talk about interesting technology we're building and stuff like that. And I think in a way that's a way to filter out this noise about the market pressures. But every protocol, Bitcoin included, faces the market pressures, and dealing with that is something that's never happened before. So that's that in and of itself is something that needs to be dealt with.
Yeah, I guess that I see a slight difference with Bitcoin in that, whether you call Bitcoin gold or money, I mean, it essentially only is money, and that's pretty much all it really is. Whereas I guess with Ethereum, people are trying to build a whole bunch of different kind of application assets with it, and many of them aren't directly money, but maybe are a kind of sub-representation of money. So I guess people see it slightly different, and I guess this is why I will maybe in some ways defend what Tuur was trying to get at with his Tweetstorm, because I think what he was trying to do was he was thinking a lot about investors and the risks of investors investing in this. And you all have a counter point to this, and I'd love to hear your reaction. But I think this is where he was referring to it maybe as a science experiment, in that maybe it would be better if this was kind of in some MIT lab being developed, built, and understood before people were trading the Ethereum token. Do you see that point?
Not really. I think one of the biggest and coolest things about Ethereum is that it is an open source project and it has just been allowed to exist. And there are plenty of examples of protocols being developed by closed source entities that are inherently capturing the entire system, and that's a threat in and of itself. Bitcoin has went through this kind of immaculate conception, and there is no other coin that could ever have that happen again. It's just not possible. So that, you know, that's a hard thing to drive against, and that's a hard thing to respond to, because there is no good response. We can't have a second immaculate conception. It'll just never happen.
Right. Okay, that's a fair point. Okay, so I think we should work through some of Tuur's points, because I think it would be good to respond, and then I think it would be a good way to end is then just talk a little bit more about Ethereum and the future of Ethereum, because I don't think we should focus the entire interview on his Tweetstorm. But what I've done is I've picked out some of the key points and I've also read both of your responses. The first thing he talked about was culture, and I think what my understanding of his point here was that, and actually there's a better way to sum it up. When you responded, Bryant, there was a sub-comment from a chap by the name of Bob McElrath, and he's put that culture is the goal stated by Vitalik to move fast and break things. Bitcoin is decidedly more conservative. Don't break anything ever. Do you think that's a fair observation?
So I guess first, so that the culture comment was really what drove me to even write that in the first place, because that just strikes me as a completely ridiculous argument. For one, I think what the culture he's trying to drive with his comment is that we are all scammers and we are all like unscrupulous people, and that of course makes people angry when you tell them that the thing they're working so hard on and spending so much of their time on is just like something throwaway and something just meant for pure monetary gain. And especially with the Ethereum community, I think such a large part of it is not about that it's like just you get a really strong response from that. So that's kind of the first thing. And a subcontext to that is that you can't really experience the culture of an ecosystem without being inside of it. I can make a guess to what the culture of Bitcoin is, but I've never been inside the community. From the outside looking in, like Scott was saying, it's a bit adversarial in nature by looking at it, but that's just, I think, just a function of what it's trying to do and the impact it's trying to have. I mean, right there in the white paper, it's like, we want to be the next world financial system. Like, we want to down all the bankers and they're all corrupt and all this stuff. It's very adversarial. And I respect it. I think one of the coolest things that has come out of all this is that we finally have tools for dealing with the corruptions and the injustices in the world. And I think the Ethereum community is kind of focused on a different aspect of that, namely big tech companies and the surveillance economy. And I think a lot of the community is really interested from that perspective. But the banking system, the financial system are a huge problem.
It's an interesting point you said there about you have tools for dealing with the corruption and, say, fraud and things. Do you think there's also an argument that new tools have been created to allow for corruption and fraud, and that equally could be labeled at Bitcoin to a certain extent as well?
Absolutely. I think one of the key aspects of a technology that enables freedom on the level that Bitcoin, Ethereum, any real crypto project does is that it can be used for rampant crime. One of the first major use cases of Bitcoin, as everyone knows, is the drugs that you could buy on Silk Road and all that stuff. That's a lot of people that I've met that got interested in early on, got interested in it through that, and then they realized, oh, it's so much more powerful than that, so much more interesting than that. And I think with Ethereum, you have this ICO, it's like, oh, I can launch a token in 15 minutes and scam a bunch of people out of their money. But I think it points to a deeper underlying thing that's way more fascinating, that we can build projects that don't like have a home. They don't have a home country. They're not a company. We can deal with problems by kind of collectively coming together and working on them instead of like a top-down infrastructure. And I think that's really interesting.
And Scott, what did you feel about the comments about culture? And because I got to say, it does seem from my side that whilst people have experienced, say, hacks and loss of funds with both Bitcoin and Ethereum, there appears within, say, Ethereum to be more instances of money and value being lost where maybe there's a problem with the code or a problem with, say, a smart contract. And then I have obviously read that move fast, break things. It does feel a kind of a dangerous statement to have when you have a protocol which does hold a lot of value and a lot of money for people.
I think the reasons why you're seeing more instances like in the news, well, it's not really just the news, but social media feeds and everything, is because the way people use, one of the big reasons, the way people use Bitcoin and Ethereum, Ether are very different, right? You buy Bitcoin mainly like until layer 2 stuff gets traction. You buy Bitcoin to sell it to someone later and then take that, store your value, take your money out like in however many years, right? It's hold. And so if you buy Bitcoin and leave it on Coinbase, or you buy Bitcoin and put it on a hardware wallet and like bury that hardware wallet under your house, you're not actually interacting with it. But a lot of people bought Ether because they wanted to use Ether, and they were going on their computer like once a week or once a month and doing something with it. And just because you're actually using the magic internet money, you have more places to touch someone when they're transferring it. And I mean, I think there's like an education process that needs to happen for who people trust, like in a Slack chat room, right? Slack used to be like the hotbed for like scamming people out of their crypto and projects, and people reacted, and very few teams use Slack today. So I think it's almost a problem of actual real use adoption.
I'm not sure that's really what I was getting at. Yeah, I agree. People will have bought ETH to use. I understand that. I would have said the majority of people bought ETH as a trade to make money, and I think that's why the price is so volatile. Yes, there's certainly people who are buying it to use it, but the price is driven by buying and selling, right? Not system usage. So I would have thought the majority would be buying as a speculative asset.
I mean, lots of people bought Ether because they thought it was going to go up. Don't want to definitely agree with you on that. But if you did buy Ether and you just left it on Coinbase, or you like put it on your hardware wallet, you probably weren't getting scammed like that. Like it's only if you're actually using it and transferring it that you have the opportunity to transfer it to someone that's lying about who they are and why you're sending it to them.
But I'm not so much talking here about the scammers, because that can happen with Bitcoin, right? It only happened the other day. I'm talking about more something, say, like the parity wallet, where there seems to be more of that because the Ethereum community, development community, seems to move faster, right? And it seems to be a bigger, kind of riskier system. And I think that's the point that Tuur was getting out, rather than people being scammed, because that can happen with any cryptocurrency.
The parity multi-sig hack was really one of the main instances that got me interested in joining, because move fast and break things is the mindset of the traditional application world. Like, that's Silicon Valley's culture. We didn't create that ourselves. That's kind of adopted from the system that we're tending to fight against. Whereas the culture I come from, it takes us 3 years to build like the first part of a project. And I think the reality is somewhere in between the two. We definitely need to take things more seriously. And over the past year, we have started taking things more seriously. One of the most interesting things technically is that the use of formal verification proofs has never really been something practical or useful to do until smart contracts arrived. And in fact, MakerDAO is a great example of that. They've formally verified all their contracts that exist on chain, and that's the reason why I can trust it to hold as much money as it does. So that's kind of the security answer to the question. And the answer to the kind of speculator investment question, I would say, is nobody told them to do that.
No, of course not. Of course nobody told them to do that. We still have to kind of be aware that people are investing, right? Whilst nobody told them to do it, I'm guessing the Ethereum development community provides some kind of support to exchanges to allow the trade of the asset. So, if you're able to buy an asset, I think there has to be some kind of responsibility towards the security of the code base.
Yeah. I mean, so one of the things I formed this past year was the security community, and it's about 250 people from the community that are purely focused as either security researchers or sort of core developers or protocol engineers, as I would call them, that are focused on like all the different layers of the stack. And Ethereum is, I will 100% agree, is like 10 to 100x more complicated than what Bitcoin is. And that's been pointed to as a negative, but there's certain situations where more complexity is actually justified. And I think Ethereum, while it grows and changes like any decentralized project, and that tends to add more complexity as things goes on, the core idea of, what if we took blockchain and verification of transactions and made transactions sort of arbitrary against a virtual machine that is able to execute arbitrary computations. I think that grabbed a lot of people technically, and it's a justified layer of complexity to start from.
One of the things that stands out to me is the pure sheer size of how big Ethereum can be in terms of how much can be put on chain, right? There is a certain amount of, and Tuur referred to this, there's a certain amount of bloat within the system. I've been reading some about ETH2 and about some of the ways that's going to be dealing with that. How big a challenge is it, and how big a problem is it, the size of the blockchain?
So I think this is a common misconception. I think a lot of people point to the 2 terabyte number and like, oh man, it's crazy. But that's really only an archive node, which contains every single possible computational step that's ever occurred. The real size, and Afri, one of the parity engineers, has a blog that just says it. It's 138 gigabytes, and it's growing. And the problem is that we actually have some mechanisms for some small amount of extra scaling now. But if we release those out in the wild, it's going to get more use, and then the state problem is going to start blooming. So we have a bunch of proposals and ideas, state rent, that hopefully will start to deal with this. And I think there's a lot of really interesting, I think Coda is working on a sort of recursive blockchain where you only really have to keep track of the most recent block. There's a lot of different things being tried that will hopefully help attack this problem. And this problem not only affects Ethereum, it affects Bitcoin. And how are you going to use Bitcoin in 50 years when it's, you're passing around terabytes of blocks, or you're downloading the chain and it takes terabytes of data to download? We all have to figure out how to deal with this. It's one of the core problems with blockchains as an architecture in general.
Would I be right in thinking that it's a more pressing problem for Ethereum because of the rate at which it's growing and the amount of stuff that's being built upon it? Like I accept it's a problem for Bitcoin too, and I've read about proposals to reduce it. I think there's one from Gregory Maxwell actually. But is it more of a pressing issue for Ethereum?
I think we'll bump into that sooner than later. I think what some of the core protocol engineers have raised is more out of a position of caution. Like if we, double the gas limit, which is the kind of the limit to the amount of transactions that can be put in a block. If we doubled that limit, then we would start like quadratically growing the size of the state. So like we want to avoid that, but we want to do scaling, but it's like a chicken egg problem. So yeah, I agree with you. I think people make it a bigger problem than it is currently, but I also believe in the long term, if not dealt with, it will become a huge problem.
Next up, I talked to Scott and Bryant more about what's coming up for Ethereum and the various challenges, but also the things they're excited about. But before that, I have a message from my show sponsors. So first up, Block Phi, one of a handful of companies that I am really excited about. I love me a crypto company which is creating value, one which is customers, one that is moving Bitcoin and the cryptocurrency ecosystem forward. And Block Phi, they're pretty cool. They're bridging the gap between cryptocurrencies and the real world, something which is definitely needed. I mean, I finally got myself a business bank account. I have tried everywhere and I just wasn't able to get one because my business touches Bitcoin. After rejections by 6 banks, I've finally been accepted by one, which is super cool. But I think companies like Block Phi in the future are going to solve these problems. They're going to get us around these problems of being able to trade and set up businesses because we won't need the approval from somebody like a bank who want to know everything about what we do. I gotta say, I love Block Phi, and with the additional $4 million they raised in finance at the end of last year, they are looking to create a whole suite of cool new products. They've got crypto credit cards coming, and they've also got a crypto savings account which earns you interest, which I am really, really interested in myself. So you gotta keep an eye on Block Phi. You gotta follow them on Twitter. You gotta sign up for their newsletter because you do not want to miss out on what's coming for them. And listen, if you are interested in a crypto-backed loan, well, Block Phi is the leading crypto to USD lender in the US, servicing over 47 states, but they also service globally, and they've got interest rates as low as 4.5%. Also, Block Phi accepts Bitcoin, Ether, and Litecoin as collateral. The customers can be funded in USD or GUSD, which is Gemini's dollar-backed stablecoin, and you can go from application to funding in as little as 30 minutes. If you sign up at blockfi.com/whatbitcoindid, you can get $25 in free crypto added to customer collateral loans of under $10,000 or $50 in free crypto added to customer collateral loans over $10,000. And applying takes less than 2 minutes. So you know the drill. Check them out at blockfi.com, which is blockfi.com/whatbitcoindid. And I've got another new sponsor this week. It's an absolute badass company in the world of Bitcoin and crypto. I've got BitRefill sponsoring the show. So listen, following my interview with John Carvalho last week, I took some time. I checked them out, and then I reached out to John. I was like, come on, man, let's get you guys sponsoring the podcast. Let's get you a slot. And they came back and said yes, which is so cool. So thank you, John, and thank you, BitRefill. So do you know BitRefill? You should. They've got a lot of customers. Over 130,000 people have used them in over 170 countries. So you can trust that BitRefill have got game in the Bitcoin and crypto industry. They are helping people live on crypto, allowing you to buy gift cards, top up your phone, and pay for your bills with Bitcoin, Dash, Dogecoin, Litecoin, and Ether. How cool is that? Another crypto business creating value. Another company who's created something which people are actually using. And I used it. I checked it out. I went on and I bought my son a PlayStation gift card with Bitcoin. And I'm telling you now, it could not have been easier. I did it in 4 steps. I selected the PlayStation network. I selected the amount, which was 20 quid. I sent the Bitcoin over and the payment was detected. It was immediate, actually. And I think it's because they only use one confirmation. So I got the serial code, and within like 30 seconds, I think I got the confirmation, handed it over to my son, and he was using it on FIFA straight away. It was so slick, it was so quick, kind of blew me away. So yeah, I'm now a customer. I'm going to be using them. And you know what? BitRefill have so many vouchers. They've got Spotify, PlayStation Network, as I mentioned. They've got Steam, Hotels.com, ASOS, Virgin. There are loads. You just got to go on their website and check them out. So head over to bitrefill.com/WBD, which is BITREFILL.com/WBD. They are the easiest way to use your Bitcoin and altcoins to buy gift cards and top up your phone. That is bitrefill.com/WBD. Make sure you add the WBD. It just lets them know that you came because of the show. So bitrefill.com, BITREIFL.com/WBD. And how does the problem manifest itself? Like, what is the impact of having such a bloated blockchain? Does it end up meaning Ethereum becomes more centralized, or does it mean it runs slower? What are the kind of problems that this causes?
I think at a low level, just more disk space. A big problem is that it keeps things like mobile phones and laptops and stuff out of the picture, which is definitely a design goal for especially Ethereum 2.0 to like be able to run this on a laptop and even be able to run a light client on a mobile phone. We can't do the kinds of things we want to do if that's not possible. So computing devices and keeping them reasonable and consumer friendly kind of computing devices is a core point. And I think with any other protocol, that's also probably a core precept of the design. Is like you want to be able to actually run it on normal machines. That's a big part of the whole big block debate too. It's right. Like if you start pushing around very large blocks, you're going to start needing very centralized computers to deal with it. So the decentralization design space is like so multifaceted and so hard to reason about. It can be a problem to figure out what the right solutions are, but I think we're all coming to agreements.
One of the things Tuur touched on quite a bit was proof of stake. And there seems to be a very kind of black and white Ethereum v Bitcoin view here, which is the best consensus mechanism, whether it's a proof of stake or proof of work. Obviously, Ethereum is moving to proof of stake. Firstly, can you just, because of the kind of people who might listen to my show, can you explain the differences between proof of stake and proof of work and why the Ethereum community is so keen on moving to proof of stake?
So in proof of work, you essentially have a computer trying to solve a math riddle until it finds an acceptable solution, sends the block to the chain, and everyone realizes that some anonymous person or pool put in resources to put this block forward. And that solves nothing. I'm not a technical expert, but there's something at stake for that block producer if they double spent coins or they produced an invalid, or they included invalid transactions with that block. Proof of stake takes a different way to assure that there's something at stake for the person that's validating, or for the entity that's validating the transactions. And that stake is tokens on the protocol rather than energy or resources expended to solve the math riddle or do the work.
So I think like proof of work, proof of stake, I think it's highly technical where you dive into it. So you're just going to have to do your own research to really understand the differences. But one of the really cool things about proof of work is it really solves like not just 1, 2, or 3 problems, but 4 problems at the same time with like the same algorithm. And one of, I guess, the negatives of proof of stake design is that it can only really solve, I think, 2 or 3 of them. It can't solve all 4. But there's a way to layer the approach where it can indeed solve all 4. So one of the biggest things that proof of work gets you is the ability to like filter out noise. So like, you post a Reddit article, a bunch of people respond to it. There's a bunch of low quality comments. How do you know you're getting what is the most useful? Well, the proof of work mechanism says that you put some effort in to get yours at the head of the heap. And therefore, because you put effort into it, it's worth listening to you. So proof of stake is taking that idea that effort kind of gets represented in proof of work as the amount of computational power you have, and vis-a-vis the amount of money you spent purchasing that computational power. It makes it explicit. It turns it into an actual equation you can design for and reason about. And I think that's one of the huge pluses about proof of stake is that you can say, well, with this much security, here's the returns, here's what's at stake if certain people don't agree. This is what it is, and we can kind of reason about it in that way. Whereas proof of work ends up a little bit more noisy and probabilistic in its behavior.
So I've tried mining, and whilst I've lost money, it's been a very useful exercise. So I bought some Dragon Mints and some S9s, and one of the very interesting things about it is every month trying to get as cheap power as I can, but balancing up the cost of running them versus what I mine, and I've had some loss-making months. I've also staked Zcoin. So I can't remember what the number I was, but I bought, let's say, 1,000 Zcoin and I have a Z node and I get a payout every month. The distinct difference for me in that experience is I have a one-off cost with Zcoin, and then I'm a player. I'm in the game. I don't have to do anything else, and I just get my returns each month. With my proof of work with my mining, I'm constantly having to work at this to make sure like I can afford to do this. And there's a very distinct difference in that experience for me. Can you see the experience I'm going through? I'm kind of like,
yeah, I actually like that you're trying to make it more physical and more real. And maybe a critique of proof of stake is that it feels less real. But the losses are no less real. If you're offline for a certain period of time, your balances start dropping until you're kicked out, which is, I think, at like 95%.
there's not too much ongoing cost with proof of stake, right?
There is the cost of running the validation. So you still have to have probably more specialized computing devices on the network communicating at all times. You just don't need to have an ASIC. You don't need to have a GPU. You don't need to have that. I think one of the really interesting things about the Ethereum Classic hack that just happened was that the computing power for that was purchased. It was mercenary GPUs that were put to use in that attack. And that's something that really isn't possible on proof of stake because your coins are locked. They cannot be moved. You can maybe create some sort of derivative contract and offer it and go through complexity of that. But like, why would I give you the keys to my kingdom in that regard? It seems a little antithetical.
If you were honest, what are the things about the migration to proof of stake that do concern you? Now, I would definitely be out of my depth here, so I tried to read about some of the design problems with proof of stake, some of the issues with censorship, vulnerability, etc. Like, if you were openly honest, what concerns you about proof of stake?
So like I was saying, proof of stake doesn't solve all four problems at the same time, and I'm pretty sure the biggest problem that it's not really able to solve is becoming a source of randomness to ensure the proper kind of mixing through of the validating parties. So like just like in with mining, whoever is the block producer is sort of randomly chosen. However, and in proof of stake is actually a committee of validators that are randomly chosen. However, the source of randomness is a problem, and that's not something easily solved by proof of stake because any source of randomness can be biased towards choosing more and more of a particular set of validators that, let's say, you own. So the community response to this has been RANDAO, and with Ethereum 2.0, we're exploring this RANDAO idea, which I think is similar-ish to Dfinity and the protocol they're working on. Obviously different in practice, and then you get all sorts of complexity with that. I think that's the one area that I'm still watching to see like how it turns out and if it makes sense. There's been this like VDF rig proposed, which is like a much less power hungry device, but it's still like a custom device, kind of like an ASIC that you would have to run in order to help ensure the randomness is unbiasable.
What's involved in the migration from proof of work to proof of stake, and how risky a migration is that?
That's a huge risk. That's probably the second thing I'm most worried about. What the migration will be. I think there's a lot of cool research going on, and it's going to happen, and then we're going to have this thing, and then it's like, cool. There's 2, 3, 4 years of these protocols operating out in the wild on the 1x chain or the 1.0 chain, whatever you want to call it. How do we move them over? So I think as the developer community, the people that build on top of Ethereum, we need to have a bigger conversation about migrations and upgrades and for each of these protocols and how to make them easy and effective so we can change over to this new chain architecture easily. And it's like each sub-community that's running, like MakerDAO has a little sub-community, and all these different protocols of the sub-communities, how do they process that upgrade and move to a different chain?
So will ETH1 and ETH2 be running side by side at one point?
Yes.
And will the ETH token be valid on both chains, or would there be separate tokens?
There's this kind of one-way mechanism that's been proposed to move your 1.0 ETH to 2.0 in order to become a validator. So that'll be the like initial migration process of just the ETH that exists. So
the total supply across both chains will never change?
Yeah, I'm pretty sure. I mean, like the rewards that are offered are kind of created on the chain in the same way that the block reward is produced. So I think in that way, actually, the proof of work Ethereum will have a higher issuance in the proof of stake Ethereum at that point.
And Scott, as somebody who's building on Ethereum, are you fully conscious that there is Ethereum 1 and Ethereum 2, and that at some point you're going to have to possibly re-architecture and rebuild everything you've done to work on ETH2? I mean, I'm obviously out of my depth here, but do you understand the question?
Yeah, for sure. Definitely some of the stuff that we've built will have to be rebuilt. A lot of the most important things for interacting with a blockchain happen within the user's experience in like the regular web app. All those things might not need to change that much. Some facets of them will. But I think at the same time, what I'm hoping happens, and I think it's the plan, is that the performance is going to be much, much better. And the kinks in the user experience that are created by having to make a transaction, sign it to a transaction pool or a mempool, wait for a miner to mine it, they're not going to completely go away, but I think it'll just be much, much better. And so there will be costs, but if it happens, it'll be because when the switch is made, if it all gets figured out, which I think it will, the benefits will be much greater.
Projects will move over if they see a clear cost-benefit analysis to the new chain.
Is it almost like, I go back to when I had a web agency, we had some clients, we would build their web applications using .NET and some were PHP. Is it almost a case of like, if we move one client from .NET to PHP, the users of the website would have no idea, but it would be an upgrade or a kind of transition in the back end? Is it like that?
Absolutely, I think.
Yeah, although the users might not notice that some random stuff they had to do before they don't have to do now. Like the fact that your transaction is spec to be final, much more to have finality better and more predictably. Like I think going and checking how many confirmations you have on like a block explorer, that's pretty annoying for users.
Yeah, that's a great point. Like what the Ethereum Classic produced, I think many exchanges were using like 200 blocks or something to call it final, but they really should have been using like 1,000. And really the confirmation depth, and this gets into the probabilistic nature of proof of work, really depends on the amount of hash power that's actually mining the chain. So Bitcoin, it's like 2 blocks is the right depth, and Ethereum, I think it's like 120 or I don't know. There's some number depth where it matters.
Like, have you ever just gotten unlucky and had to wait an hour, like for a new block, like on Bitcoin? That's not fun if you have a business and your users are having to do that. I like it if it's just like snap your fingers and it's there.
There's a lot of UX problems that we're going to be figuring out from now till then. So I think the user experience for like the front-facing user experience will be there, and the user won't experience much of a difference in that. But like I really believe that Ethereum is like a big part of the back end of this like Web3 decentralized web idea, and the core users of Ethereum will end up being just engineers who are learning how to interact and learning how to give that to the users in a way they don't notice. The best user experience is that what you don't notice.
Okay, so let's shoot a few years down the line. ETH2's out, plenty of people are using it. Will there become a time then that ETH1 is retired? And how is that decided? And does it just come down to whether anyone is mining? Would it come down to that? How does that process work?
I would say, yeah, like you're saying, the lack of miners would kind of declare it dead in the same way that a lot of these like Bitcoin copy coins that just kind of die. Not out of the fact that it doesn't exist and you can't still run it. It's just that nobody cares. People stop caring about it at some point because it no longer has value, and the new thing has so much more value that everyone's on it. We're porting over a whole network effect, which is kind of crazy, but yeah, that's the idea.
Brian, did someone recently propose that the ETH1 chain would actually be on a shard?
Yeah.
2.0. I don't think it's completely settled exactly how.
Yeah, it's not completely settled exactly how it'll work out, but that's one suggestion, that the current chain becomes a shard chain or like a sub chain of the 2.0 chain. So it's kind of like, instead of a discrete transfer over, it's more of a growing of what's possible with the current chain. But that approach is definitely a lot harder to accomplish.
And I think one of the most important differences about Bitcoin process and Ethereum process is that if you think it's likely that the Ethereum 2.0 will happen, you're sort of putting your confidence that this problem-solving community will be able to solve the problems. And new solutions, people are very open to new ways of doing things. And it's more of a dialogue, I would say, than a debate.
Yeah, because it's such a collaborative community, like the tools needed to port over to the new chain or integrate it into the new chain or whatever happens, because it's so collaborative, like we'll work on them together. So no one of us is like doing all the work, but we're able to all take advantage of it and move over, which I think is a very valuable thing in a community.
Did either of you read the Medium post by James Presswich that came out yesterday about ETH2?
I was reading through that. I didn't get a chance to get all the way through it.
So I had a read of it, and as I've told you, I'm not technical, and I try my best to understand these things. And the level of complexity and the problems that need to be solved, like, they're huge, right? And it reminded me of, I tell you, it might sound a very weird comparison, but I was at South by Southwest a couple of years ago, and I went as a guy with a web business, but I ended up, some of the most interesting discussions I went to were nothing to do with my industry. And I ended up in one with NASA, where they were talking about the complexities of putting a man on Mars. And they were talking about they are having to solve things that have never been solved before. They might not even be able to solve. And I couldn't help, when reading this document, thinking about that, thinking some of these problems seem huge. Like, and is there a chance that some of these problems just cannot be solved? Like, how do you feel about the level of complexity involved here?
As from a security perspective, definitely more complexity grows like almost quadratically the amount of risk you're exposed to. So the idea is to find the right level of complexity where you're getting what you want out of it without adding too much to it. And also composing these different pieces of complexity together so that one doesn't affect the other. So that is, I guess, one thing that does worry me in what's upcoming. And I think a really great thing that I also personally like about Ethereum is that there's not one client that's like the canonical client and everyone uses it. Because if there's one thing I've learned from my experience in helicopter design, is that like you need redundancy. So we have parity, we have Geth. The 2.0 I think has 8 different teams. So any problem that gets discovered in the protocol, the specifications, or the data structures, or anything like that, will be exposed because there's a lot of different people working in different languages that are attacking it from different angles. And that, to me, is the only real way to like build a truly secure piece of infrastructure like this.
Peter, I think you're completely right in that it's possible, some of the problems that people plan to solve won't be solvable. It seems very possible and plausible to solve them all. But I think one of the advantages with like an open community that looks favorably on new ideas that didn't come from them is that you might actually get a brand new idea that's like way better and creates an even better way to make F2.0 work. And because you're always looking for new ideas, and people know that if they bring something that's new, they'll be given a reasonable hearing and celebrated if it actually does work better. You also have this shot that like you're not just limited by what you think you might be able to solve in the future, because humans are really innovative, and if you don't censor their ideas, and if you do let free thought and positive dialogue happen, like really cool stuff can come out of it. I think that's sort of like one of the things I like most about Ethereum.
And I think that also holds almost for the wider cryptocurrency community. These are all open source projects, and I think a lot of the ethos of what we're trying to do is, in essence, make the world a better place in so many different ways. We should be like almost celebrating each other in what we're doing. Like Raiden can learn from Lightning, Ethereum can learn from Coda, like I was talking about. Like all these things are sharing components. And the only way that we really succeed in that goal is by working together and kind of helping each other. And I guess that's the one thing that resonates me with Ethereum's community, is that it's not adversarial. It's very collaborative. And I hope that more communities adopt that, to understand like there isn't going to be just like one coin that wins. It's probably not going to look anything like what we're looking at right now. 5-10 years from now, it could be, I don't know, it could be called something totally different. Who knows?
Like I think about it as like the meta decentralization project. And even though there's like rivalries between different almost quote unquote ideologies within like Bitcoin versus Bitcoin Cash or whatever, at the end of the day, it's like everyone's trying to solve really hard problems in different ways to make human society better for everyone. And if Bitcoin accomplishes everything that I see Ethereum is possibly accomplishing and Ethereum fails, I probably might have less money, but I'll be pretty happy.
I agree with that 100%.
Another thing that stands out to me, and I'm not here just to pick on Ethereum, but I'm trying to answer or understand the things that I don't get. There's been a lot of criticism labeled across the crypto space on the amount of adoption there has been with dApps and protocols, etc. There seems to be a vast imbalance between the amount of work that needs to go into ETH2, the multi-year project, the amount of developers and work to build something that has not really seen like a real wide adoption. Do you understand where I'm coming from?
Yeah, I think a lot of people like to point to daily active user metrics because that's how Web2 kind of points to it. And the really important thing to recognize is that it follows a power law distribution. So the amount of like for example, I was reading something that the amount of people posting on Reddit is like something like 1% the actual users. So by that metric, daily active users only counts towards actions taken in these different protocols that are built on Ethereum or any other thing. Like the holders of Bitcoin are users because they're using it to store their value. They're just not active users, but they are active users. They are actively using it what it's meant to be used for. And that's why I think like the decentralized finance ideas are really interesting because it takes advantage of that. I think finance in and of itself, there's a lot of inefficiencies in the process that can be improved. And they're, at the end of the day, one of the few people that are willing to pay for those improvements that they can until the scalability is there that we can support more wider scale applications. And not to say that finance is the only thing that can be built on it right now. I think it's about finding other use cases like with what I'm working with on my project. We figured out the amount of transactions that could be potentially done. And even if 100% of them happen over the course of the year, it's still only like 2 or 3 a second that we're supporting on our like sub-layer chain or whatever it is, which means that there's only like 1 transaction a week or something that we're pushing to Ethereum. And if that 1 transaction a week is accommodating for millions of users, like that's pretty cool. We've compressed all this activity into like one little string of bytes.
I guess like what I worry about is that how many of these projects are actually creating things that enough people are going to be using to create enough value to create sustainable companies and projects and applications. And I'm seeing a very kind of big disconnect with that. And it's also a worry. It's still a worry I kind of have at sometimes with Bitcoin as well. I don't think Bitcoin has solved this problem at all. I just see I almost look down CoinMarketCap, and the further I go, the bigger problem I see it is. So I see it as a problem Bitcoin with adoption. I see a bigger problem with Ethereum, and then I'll get down to things like, I don't know, Litecoin or Cardano or anything, or Neo, and I think it just becomes a bigger problem the further down you go. And I think we've all got these kind of big hopes and dreams, but potentially the use case may be just not there for enough people.
So I might look at what the actual plan for making Ethereum usable was, like when it's launched. And I think the goals of the Ethereum Foundation and the people in the Ethereum community was to get product market fit with developers, with the idea that Ethereum Foundation was not going to build the Ethereum wallet and they weren't going to own ethereumloans.com, right? They wanted to attract developers almost, I mean, it's not talked about this way, but you think about developers as kind of the daily active users of Ethereum that they were going to attract and that they wanted to be judged on, like the premier conference in Ethereum is DevCon, right? It's not trying to get people hyped up about like spending Ether, like to buy goods. And I think what we're in the middle of right now is sort of, they did get really good product market fit with developers. And now the challenge is to scale the chain so it can support a lot of users, and to find apps that, like, what apps are these developers going to build on Ethereum that can actually attract a lot of users. And I sort of see the growth in MakerDAO as kind of the best example. There are others, but the best example within the Ethereum community of something that has real users, that people just do it to create a loan for themselves, so they, with like a collateralized loan without any of the paperwork that you might have to do if you went to refi your home or like get a loan on your car, like go do a title loan on your car, which is like a thing in the US. I'm not sure.
I think in the end of the day, and Scott hit on a great point, the users of any of these networks are not going to be like people. They're going to be developers. They're going to build these things into other applications that people use. And maybe cryptocurrencies, the idea of like digital value bubbles to the surface. Maybe it doesn't. Maybe it looks like $1, but it's really a die on the back end. Like, who's to say what that will look like? I feel like the one thing that is sure, though, is that these things are too complicated for people to use directly.
Yeah, I mean, I think if we're still talking about developer product market fit in 3 years,
that's a question.
One of my experiences is, as somebody who's built things, projects and applications in the past, is that whatever idea I've had, I would never have been able to do it without competent developers. And knowing some very competent developers, they wouldn't have been able to deliver their ideas without a very good designer working with them, and without a kind of more of a business person. It was almost, I always felt like you kind of needed those three elements. Now, obviously, you find the random freak who's great at everything, but generally speaking, I always felt like I needed a good developer, a good designer, and a good business person, and the three together can kind of make something work. And I think that probably gets to the root of one of my worries with Ethereum. It's so developer focused that there's not the practical kind of business people who understand the kind of applications that people need and will actually use, and are working to design things that let's say the normie will use, not us in this weird crypto space, like my son will use when he goes into the world, or that like my friends I sit down with the pub on a Friday night. At the moment, like even Bitcoin is hard for them. Getting them into anything like any kind of decentralized application, it seems to be such a big leap, and I'm not sure if that's a leap we will make.
I agree. I think the three parties you picked out there are, what it takes to build an application. I've seen over the past year that the kind of user experience and designer community has started coming into Ethereum, which I think is pretty promising. But one point of criticism I will take is that there has been a lack of business people in this space that only up until this past year have started filtering in as they've start understanding like what the actual use cases are and trying to find that product market fit. That's something we can do better with. But the nice thing is that developers are way more rarer than business people. So I don't think we'll have a problem finding more business people.
I guess I really hope we don't come out the end of this and the single use case we find is a dollar coin. I hope that more comes out of it. So we've kind of got away from Tuur's Tweetstorm. Before we kind of round up and close out some of my final questions, why were you overall triggered by the Tweetstorm? And is there anything in there I haven't covered that you wish I'd have asked you about?
I think as a developer, the perspective maybe that his arguments were coming from were a little bit out of the loop, and I felt like they weren't accurately representing like the experience that I have and being in the Ethereum community over a year now. It's been really like a really amazing experience, like getting to know all these like super smart people that are really interested in like human lives instead of profit. And then to hear him come back and say, oh, we're totally focused on profit and all this kind of stuff is like, it just really didn't stick with me the right way. And I that's the thing I wanted to kind of rebut against the most.
Yeah, I definitely felt like Tuur was talking about a different project than the one I'm involved in. Like Raiden and written in our chain aren't really things that I'm involved with or follow or even know about. And then his criticism that a stream of dividends was a Marxist idea, and that we had promised a utopia. It sounds a lot like if I go and buy one share of Coca-Cola stock, and then I get a very, very, very small percentage of all future cans of Coca-Cola sold across the world. That doesn't sound like Marxism or communism or socialism or utopianism. It just sounds like an asset you buy. That, like, gold is an asset you buy that happens to not pay dividends, or a government bond is an asset you buy that does pay a coupon, or a share of stock. And it seems pretty down to earth to me.
It's interesting. I talked to Tuur quite a bit about doing the podcast, and I definitely think there's some misconceptions about why he did it and his thinking. It definitely doesn't come from a place of wanting to attack Ethereum to protect his Bitcoin holding. I've got to know him, not very well, but I've got to know him because we've done 2 interviews now, and he's definitely a conscientious guy. And I think where it comes from primarily is he deals with investors a lot. And you guys have given some great answers in terms of what you're building and why you're building it, and the kind of applications you want to build. And I guess I approach that point, there's a disconnect with the token, because the token can send investors in and people to buy this token that could lose the money. And I think a lot of it also was coming from that point of view. But like, I do really appreciate you both coming on and discussing this with me. I do have a couple of final questions to close out with as well. So, firstly, it would be great to hear from both of you. What are the things that excite you most about Ethereum and what's coming up, and what kind of projects you think people should be keeping an eye out on?
Okay. Yeah, I mean, it's what I'm really excited about this upcoming year is that now that a lot of the hype has kind of flooded out, a lot more serious things are getting done. So I'm excited for a number of different things. I'm working on a hackathon for New York City, so that's one of the things I'm more personally excited about, and the projects I've been working on. But yeah, I think watching the DAI burner wallet, that was pretty cool. So somebody has made a burner wallet that's just a web page you go to, no blockchain, no anything whatsoever. It's just a JavaScript web page. You download it and you have DAI in a burner wallet that you can accept and you can trade to your friends, and none of it requires any usage of a blockchain component at all. I mean, it relies on these layered approaches, these second layer approaches that makes it really usable to an average user. But like, it's pretty cool that you can be in someplace like sub-Saharan Africa or India or somewhere, and you can just use this web page, and you can get around the kind of banking restrictions and ridiculous financial infrastructure that exists in order to do what you want. And if it really takes off, I'm sure it'll be used for less than good intentions at some point. But I think the fact that that's enabled is really interesting, really powerful.
I'm most excited about decentralized finance right now. For our second hackathon for Settle, we had a developer build a DEX aggregator, dex.ag, which is its name and also its URL. And it's cool because since DEXs are decentralized and you can compare the price of all the DEXs at the same time and then go trade on them in a permissionless manner. And I think that's a really cool thing that you can't quite have when you're dealing with centralized exchanges, because you need like an account, you need 2FA, minimum deposit, KYC, and all these other things. And as long as you're dealing with a system that's not on-chain and trustless, you're going to have those problems. And I think it's kind of a cool application, like sort of like an app on top of these other DeFi projects that are getting real traction and real users. Yeah, really love Maker, like Compound, doing cool stuff.
I would also like to parrot your point about Tuur's criticism, and I think from the investor perspective, what's the value of the Ethereum ecosystem? And I think I'm not necessarily a finance person or really interested in building projects down that path, but a lot of people are, and a lot of people are building those on top of Ethereum, and I think that will ultimately give Ethereum value if you want to talk about the value perspective. And that's important because the value ultimately informs the security of the network, and the value also allows people to fund these projects and to kind of be collaborative in that way. As things go down and down and down, that's less working capital to actually build out things with. So it is important that investors see value in the network and think it's a good investment, so that we can take that investment and actually build out our ecosystem with it. And that's one of the things over the past year that I've been coming to terms with as a developer.
And which do you think is going to happen first? Ethereum solve its major scaling complications, or Elon Musk put a man on Mars?
Oh, definitely Ethereum. I mean, Elon Musk's plan is pretty outrageous from an aerospace perspective.
I'm just teasing you. So I appreciate you both coming on. Obviously, you can tell by the interview I'm not the most technical, but I've learned some things today. I will definitely keep an eye on Ethereum. I do have my doubts still. I do worry about this huge engineering effort to build something that I still don't see many real-world applications. And I also think there's a huge risk with investing in Ethereum, but I also recognize there is a significant risk in investing in Bitcoin as well. It's not just one or the other. But I do appreciate you both coming on, and I will keep an eye on Ethereum and the work you both are doing. And yeah, what would be great is to just finish off by telling people how they can stay in touch with you and who you'd like to hear from. And you can go first, Scott.
You can find me on Twitter at Scott_LEW_IS. I love talking to people there. Or you can check out a project I'm working on at Settle.finance. I love blocking people, so if you're nasty, GTFO.
Yeah, so you can find me on Twitter, FUBULOUBU. It's a name I made up in high school. I have no idea what it means anymore, so don't ask. And currently working on GunClear, GUNCLEAR.io. You can check that out, and hopefully you find it interesting and share with your friends. We're really aiming to get that launched, and I think it would be a really good expose of a non-financial use case for Ethereum.
Fantastic. Well, look, thank you both for coming on, and let's stay in touch, and hopefully I'll speak to you again soon. Okay, so what did you make of that? Are you happy to hear some of the counter arguments? Are you bullish or bearish on Ethereum? Personally, I'm bearish in terms of holding ETH as an investment, but I won't deny the ecosystem and the community is clearly building a lot of stuff, and there is some traction in certain areas. Loads of it goes over my head, I'm going to be honest. All this ETH2 stuff just sounds crazy. I mean, it sounds so big, so complicated. I just can't see the use case. I can't see enough people building things that are going to get wider adoption, but maybe I'm not a visionary. Maybe there is something in there with Ethereum. I don't know. I just read through all this ETH2 stuff and I'm like, what? This stuff sounds crazy complicated, but I'm not a developer. I'm not a techie. Maybe this decentralized fintech thing that people are working on is a big deal. I don't know. I'm not convinced, but I'm going to maintain an open mind. But I guess for me, the jury is still out with ETH, and with ETH2 come in. But I will continue to maintain an open mind. Like I said, if someone wants to come on and discuss this with me, reach out to me. If you've got something new to bring to the table, I'm definitely interested. Anyway, I hope you enjoyed the interview. I hope you don't mind me doing an ETH interview. I hope you understand why I did it, why I offered the opportunity for counter arguments. I think that's the fair thing to do. And yeah, it was quite cool to chat to the guys. I enjoyed it. Just a reminder, I'm off to Vegas tomorrow for Tone's conference. If you're out there and you want to hang out, give me a shout. And if you're interested in launching a side gig, my course launches on Sunday, February the 2nd. Make sure you register at www.whatbitcoin did.com/side-gig. Again, big thanks to everyone who supports the show. It's been such a great start to the year. I've got so many people reaching out to me who want to advertise. I've got people coming to me with ideas for shows. People support me on Patreon. The whole thing's utterly amazing. And if you do want to support the show, if you enjoy listening to it, if you think you want to chip in somehow, there's loads of things you can do. Okay, so the first thing is make sure you listen to the advertisers. If you listen regularly and you jump in the advertisers, well, if they have no impact, I'm not going to get any advertising in the future, and then I'm going to have to close down the podcast, and then I'm going to have to get a new job, and then everything's going to be rubbish. So just give those advertisers a couple of minutes. If you don't want to listen to the advertisers, you can become a patron. If you head over to patreon.com/whatbitcoindid, I've got 71 now. You crazy, generous people. I love you all so much. Thank you so much much for supporting the show. If you do want to support the show, but you don't want to use Patreon and you want to subscribe, I've got a couple of people who subscribe by crypto. Just email me, I'll give you an address, I'll add you to the distribution list. If you do want to become a show sponsor, if you're interested, then email me on hello@whatbitcoindid.com. I'm tracking that January might be a record month, which is pretty cool. So I'll release those figures at the end of the month, but if you're interested, do reach out to me. You can just leave me a review on iTunes, or you can click on the subscribe button. Both of those help with the show ranking in iTunes. You can follow me on social media. I'm on Medium, I'm on Instagram, I'm on Twitter, I'm at What Bitcoin Did on everything. My personal Twitter is at Peter McCormack. DMs are open. Don't send me nonsense, but if you want to engage, I'll happily chat to anyone. You can check out my website, which is www.whatbitcoindid.com. I'm currently rewriting my training course. I'm going to make it free again. It's going to be mainly Bitcoin focused with warnings about investing in alternative currencies. It does have warnings about investing in Bitcoin, by the way, but it's just a different format. It's a bit more Bitcoin focused. Hopefully I'll get that out in the next couple of weeks. You can sign up to my newsletter on the website, and you can share out the show with your friends and family. On Friday, I've got an interview coming out with Andrew Torber from Gab.com, which is super fascinating. Make sure you keep an eye out for that. And listen, if you want to reach out to me, my email address is hello@whatbitcoindid.com, and I look forward to hearing from you.